Welcome back to the channel. Yesterday we did the macroeconomic video. Today we're going to dive into the charts. We're going to start off with Bitcoin. We're going to look at what everything is showing us on the charts right now and what we think may be happening over the next few weeks to even a month, right? We're going to take that same information that we see and see how it relates to Ethereum, EGLD, and Cardano and take a look at those charts as well. We'll be short, we'll be concise, and we're just going to focus on the key things that really make sense right now because the market's been pretty steady, like way too steady for the last few days. I mean, Bitcoin's really been trading in a $400 range for like 4 days. So this is the right time to do this video because there's more than likely some volatility coming. And I think we may have a decent idea of where that volatility is going to be headed. So make sure you like, make sure you subscribe, hit me up on Twitter, follow me there if you aren't already. Let's dive in and get started. So here we're looking at the Bitcoin chart, all right? We're looking at the daily. I'm going to zoom out for a minute so you can kind of catch up to where we are, right? One thing, if you haven't seen my videos before, in this Fibonacci retracement, there is this light blue area in the middle. That's called the golden pocket. This is an area that is normally created in what's called the golden ratio. And in this golden ratio, you see an area that tends to be a trend reversal area when you're looking at long time frames. So what we've seen here is when we went past it and we came down and started creating that golden pocket, we're now below it. And since the time we've been below it, that's been essentially the bear market. Well, right this moment, we've jumped up and we are starting to go above that golden pocket. Now, what's interesting about this is as we go above this golden pocket, we're really cementing that we're seeing a trend reversal to the upside. So it's a very important area. And it feels like we might be a little early based on everything we know that's happening in the world. We know that rate hikes are going to continue. We know that this is their method to fighting inflation. We're likely not going to see those rate hikes start reversing until like January. So if that's the case, and we're not going to see a flood of capital coming into markets until January, well, we have a few things to consider, right? Does that mean we're going to consolidate? And if we are going to consolidate, where are we going to look at for buy areas? What's going to be our bottom targets and how soon may those buy areas be coming? So to identify those, we have to really take a look at what are the bottoms that we've been hitting so far. Now, during this uptrend, we hit a bottom here at around 19,500. Before that, we really bottomed out officially at around 16.3K, right? For now, I think most of the market is considering that that was the bottom. I think it really makes sense that it was. There's no reason that we can't come down and touch it again if things get very bearish. But I think that with the amount of time left until the halving, it's unlikely that we see that type of event, especially with ETFs already in the works. I think that if the ETFs get denied or something like that, you probably see a drop down to maybe this $24,000 level where we saw a prior bottom and we start getting support there. From 25K up to 31K was all due to that ETF news coming in, that BlackRock filed for an ETF. So it's feasible to say that if that news comes in negative, that we see a drop back down to that 25K level. It's a very high possibility that that could happen in that scenario. Now, assuming that doesn't happen and we continue going sideways like we are, and we don't get that information about ETFs until closer to the deadlines, which are near April, like right around the halving. Well, that tells us that what we could end up doing is going sideways for a while. Now, we're not going to project all the way out to April. That's a little too far to project. But if we project out to about September, we see a clear trend with where we've been hitting bottoms. We had a bottom here, 16.8K, 16,000 to 16.8. We started moving up in that range. Then we hit 19.5K. That was another bottom. We dropped down from around 25 back to 19.5. Then we went all the way up to around 31K, dropped back down to 25K. And now we're working in this 30,000, 29,000, 29 to 30K area. That's where we've been sitting for quite a while. The last few days have been just in like a $400 range. So if we continue looking at this trend line going up, well, it tells us that at least until October, we still have room in this trend to continue consolidating. That tells me that if we're going to take a drop now, which I think it's possible because we're seeing a similar pattern here to what we saw here, then we're likely going to drop down and touch the bottom of this trend line again, which is somewhere around the $27,000 mark and falls right on the 200 exponential moving average, which you can see we hit here and we drop below right here. So what's interesting about this is that if we do see that drop, well, it's giving us a pretty decent buy zone, right? And it shows us that if we're going to test that golden pocket again, well, having some orders down at around 26.7K, 27.2K, like that entire range is not a bad idea if you're trying to pick up some more BTC. We could see a dip there. Now, the other thing that that fits with is this new indicator that I've been looking at. It's not really new. I mean, I just don't use it too often in my videos, but it's called Market Cipher. And in Market Cipher, you can see what happens in this chart is it shows you when momentum is going up, you can see the blue going above this middle line. When the momentum's going down, you can see that the blue is below that yellow median line. So now what we're seeing is during the last drop, we had a lot of green and red signals. Those were like bullish signals and bearish signals. And what ended up happening is that ended up leading us lower while we were underneath, while we had this low momentum. Now what we saw is we saw a move pick up, which was like right here. This got picked up as a green move, taking us back to the median line. And then it moved us down and we bottomed out right at these other bottoms. So you see these double green lines right at the bottom. Well, we had one bottom there that was at 19.5 or right around 20K, right around that mark. That's where you see that green dot. Then you saw another green dot at that double line also here at around 25K. So now what you can see is that we're in the bottom momentum, but we have not touched those double green dots yet. So that tells me that if we want to see another green signal like this to show us a bump to the upside, well, there's a big possibility that we drop down to around 27K. That takes us into these double lines. We see a shift of momentum putting us back up, and then you end up seeing something like this, right? You end up seeing us drop down, test this area, which is hitting right around the 200 exponential, and then we can start coming back up, and we're still consolidating in this range. Now, what's interesting about that, if we continue consolidating in that range, we are actually looking at an apex at the end of this ascending triangle. This whole thing turns into an ascending triangle, and the apex is right around October 3rd all the way until October 15th. So it's like a 2-week area. That's our apex. So there's no reason that we don't keep continually consolidating in this range until we start hitting that apex. At least right now, that's the best case based on what we're seeing. And it makes sense with the relatively low amount of information coming into markets. Now, even if this changes a little bit and we start to see something more like this, right? Let's say we start consolidating down further and we break this triangle, set a new bottom, we could create a new trend and still come back right into this apex before we have a move up. These patterns tend to hold a lot of weight over longer periods of time. And right now, it's our best look at where we could see ourselves until this October timeframe, especially if we're not looking for a massive move until then, or we're not expecting the news to push one. So we could easily get some news to, push BTC up even further. But if we continue consolidating like this, well, it's setting us up for a really big move later on in the year. Now, this is the ideal scenario in my eyes. If we can continue on the trend like this, that means there's still a good amount of time for accumulation in this very range that we're in now. And I think anywhere from like 25K to 35K is a great time to accumulate. I mean, consider this. If you're looking at all-time highs at 69K, close to 70,000, and you're expecting those to be hit again some point after the halving next year, well, that's really telling us that you're looking at upwards of 100% return if you're investing now. And that tells me that the longer it stays in this area and the more accumulation you can fit in with DCA in this area, the long-term benefit outweighs the short-term downside, especially if you have that long time frame in mind. In my eyes, I'm going to continue holding for a number of years, maybe even more, maybe for my whole life. Who knows? It depends on where the asset goes. But I'm definitely going to be taking profits along the way. So consider that I want to take some profits when we hit all-time highs again. The smart scenario is to dollar cost average in now. So even if we stay at this, anywhere from $30K to $26,000 range, I'm still picking up BTC. But if we have drops all the way down to 20K again for any reason, some massive black swan type news, well, then I can pick more up there. That's the whole benefit of DCAing, right? I'm not putting all my eggs into the basket right now. Instead, what I'm doing is I'm giving myself the opportunity to buy things lower if I need to. I also, the one risk you run by dollar cost averaging is essentially that the asset just moves up and then what you would have used to buy it cheaper, now you have to buy it more expensive. That's the cost of risk management. And if you DCA over a long period of time, you end up finding that it evens out in your favor as long as you're increasing your purchases during those dips. And that's what I do. If I see a drop here down to that 27K level, I'm probably going to do 2 or 3 weeks of DCA in one go to take advantage of that drop, and then do normal smaller DCA amounts as we work our way up. If we consolidate down again, do another larger purchase. It helps me take advantage of those drops and maintain cash reserves so I can actually get things there. Okay, so the main takeaway from this is that we're looking at around the I'd say 26.5 to 27.5K range is a decent buy zone. That's right where the 200 exponential moving average sits. And it looks like the chart supports it right now for the consolidation triangle that we're in. All right, so let's go ahead and switch over to Ethereum. And I want you to keep in mind that a lot of what we're seeing on the Bitcoin chart is relevant to Ethereum. So I'm not going to go over it all again, but I'm just going to show you as we jump into it. Let's take a look. So when you look at the Ethereum chart, you see a very similar trend line that I've drawn here with two drops. Now, what's interesting about this, if we go back to Bitcoin, you can see on the RSI, Bitcoin is sitting right at the 45 level of the RSI. If Bitcoin was to drop all the way to the 200 exponential moving average, that actually would take us down to the bottom of this RSI, right around that 30 level where you expect an uptrend. Now, if we look at Ethereum, we see that we are much closer to the 200 exponential moving average, which means if Ethereum drops in this, takes a similar drop to Bitcoin, well, it's probably going to go a bit lower to hit the bottom of that RSI where it bottomed out the last two times. So with Ethereum, I think the safe place to put your buy targets are around 1700 to 1780. That's the safe place. But if we have a dip with Bitcoin down to 27K, I think it's very likely that you see Ethereum take a larger fall down to the $1,600 level. And at that $1,600 level, well, what's interesting about that is you're hitting the prior bottom, your RSI will likely bottom out, and you're getting to pick up some Ethereum in what will probably end up being a dip like the previous ones, where it dips for a short period of time. You have about 2 days until it starts picking back up. So keep that in mind. I mean, if I was looking to accumulate Ethereum right now, I would have orders all the way down to around 1620 and up to about 1780. I think that entire range is a good buy target. Let's move on to EGLD now. I told you these other assets are going to be shorter because a lot of what's happening with Bitcoin takes the precedence. So if we look at EGLD, you can see EGLD is still stuck in this descending channel. And the problem with this descending channel is that it's very, very difficult for EGLD to break when the entire DeFi market is not getting volume, right? There's just not a lot of investment in the sector right now. And if there's not, well, assets are going to continue selling off as as more supply is created and less buyers are in the market. You're going to see that flood of asset coming into the exchanges that, you essentially have a supply excess and a demand decrease. Now, when that happens and you have less demand and higher supply, you start seeing things go down. So the real key to get us out of this is to see DeFi in general start getting more investment. And I don't know if that's going to come for quite some time. So what I'm doing with EGLD is continuing to put my buy orders underneath the descending channel where we've seen bottoms before. We saw one at around $40 when it was up here back in June 2022. And then in December 2022, we saw it bottom out at 32. We recently fell back into that area at around $28. If we go down and touch that again, it's right around 25. So for safekeeping, I have my orders for EGLD still sitting all the way down to $25 because I could easily see a drop with Bitcoin pushing EGLD back down to this level and then it getting bought back up into where it's trading now, into that $30 range, until we start seeing a lot more volume coming into the market. So right now, this is what makes the most sense to me, just to continue buying when I see dips, and I've kept doing that. At times, I buy and sell and trade and take a few profits, but I haven't done that in some time because we've been very stagnant. Okay, so let's move on and take a look at Cardano now, and we'll wrap the video there. So with Cardano, we did have a descending channel, but we broke out of that descending channel. We also had another dip when the SEC called Cardano a security. Since then, you've had news that Ripple is winning its case against the SEC. The judge ruled in Ripple's favor. The SEC is now fighting back, and they're going to appeal. So there's still a lot going on that could make this go either way. I mean, if the judges favor with Ripple and DeFi and start talking further negative and not giving rulings to the SEC that they want, then more than likely you're going to see this pump up even further, and the 50-cent mark is not too far off in that scenario, in a bullish legal scenario against the SEC. Now, if we see that just get dragged on and we don't really see any information coming out that's beneficial to the DeFi industry, then it's very likely that you're going to continue trading sideways. So I think what makes the most sense if you're trying to pick up Cardano right now is to have orders down to around the 25-cent mark where we saw this bottom out before. If you really want to play safekeeping for a large Bitcoin drop, if you think Cardano will see a large drop in that scenario as well, which I think it's very possible. Well, then your lowest orders that I think have a chance of hitting are around 19 cents. But I still think that that's unlikely unless we see a pretty significant drop back down to the 25K mark for Bitcoin. So because I think going down to 25 for Bitcoin is a little unlikely, I think it's more likely that that drop to 27K would take Cardano down to around 25 cents, 26 cents. So I think that's a decent area for buying Cardano. Overall, no other news on the DeFi side that really tells me we're going to see any of these pump massively yet. I think it's all going to be based on how Bitcoin performs and how the ruling against SEC and the whole legal battle between the SEC and the DeFi industry, mainly Ripple representing DeFi at the moment, how that plays out, because those rulings are going to be used as precedent for other DeFi projects and overall investment and flow of capital into the DeFi industry. All right, that's it for today. I hope you guys enjoyed the video. I hope this gave you some good information. Keep everything in mind. Make sure you're using it to plan out your strategy for the next few months to put yourself in a better place when that next bull market arrives, right? The real key to the bull market is not what you're doing during the bull market. It's what you're doing before. And we're in that time now. So we're looking at areas that can maximize our profit and strategies to maximize our profit. Once that bull market starts kicking off, the game plan changes completely. Then it turns into what are the areas that we can sell to maximize the profits we keep, right? Then it becomes taking profits. So we're going to get there. The time will come, but we're not there yet. So when that time comes, I'll be ready to give you more content on that. But for now, I think accumulation is really key. For my subscribers on Twitter, I'm going to have a video coming for you soon where I talk to you about my accumulation strategy. That'll be going directly to Twitter just for my subscribers. We'll talk about how I'm splitting my funds between Bitcoin and DeFi. And once I'm in DeFi, what percentage of that is going to what assets? And how am I kind of playing that strategy? You know, how many orders do I keep open at any given time? How much do I change those orders or modify them as I do these chart analysis videos? I'll let you know kind of a ballpark of what I'm doing to see if, you know, maybe those strategies will benefit you during this accumulation phase. And then I'll do something similar when it comes time for profit taking. But for right now, I just want to say I appreciate you guys. Thanks for watching the video. Make sure you like, subscribe, follow me on Twitter. You'll see a lot of good content there and interact with me, right? DM me and I'll try my best to get back to you. Leave me replies on my tweets and stuff. And I always try to respond to everyone there as much as I can. So I'll talk to you all soon. Thank you for watching. I'll catch you next time. Peace.